Hi, can a fighter jet pilot fly without a parachute? Can any football team afford to go to the field without a goalkeeper? Can a trapeze perform without a safety net? Can any nation reduce their security budget? What is this all about? Safety, protection, correct? If you are earning, you are called an asset. Why? Because there are beneficiaries of that asset. Somebody is profited out of that asset. Suppose you want to insure your car, the insurance company will insure based on something called as IDV, insured declared value. Just like that, to protect this so-called asset, there is something called human life value. The human life value is calculated based on the income. In life insurance, there is a product called term insurance. The term insurance is a very cheaper version of life insurance because unlike other traditional saving schemes, the term plan offers no maturity benefit. It is just like your car insurance. You get only the benefit out of the claim. Of course, there is something called term with return of premium also. But in any financial planning, the term with return of premium is not preferred. The premiums for a term plan varies based on your age and how long you want to protect this asset. Suppose I go for a longer tenure, say I want to cover till 75, that is riskier. And if my age is more, that is riskier. Therefore, the premiums will be higher. Now, how much insurance I need? I told about human life value. So, in human life value calculations, sometimes the age is being factored, sometimes your annual income is being factored. But to make it very simple, the simplest calculation is go for 200 times your monthly income. Suppose my annual income is say 1 lakh. I just need to have a human life value of 2 crore. That is 200 times of 1 lakh is 2 crore. What is the logic behind this? You may ask, what is the logic of covering up to human life value? Say, I am covered for 2 crore rupees. In my absence, my owner, who is the owner? My loved ones, because they are the ones who are profiting out of me. So my owners will get 2 crore rupees and they can deposit that 2 crore in a fixed deposit in a bank. An average interest rate of 6% will yield 1 lakh per month. So my 1 lakh income is not reduced even in my absence. Therefore, my loved ones can maintain the same lifestyle even in my absence. Of course, if your age is say beyond 45, maybe you need not cover up to 200 times, maybe you can cover 150 times is also okay. And if you are much younger, do these calculations every 3 years because your human life value keeps increasing as you age. And if you are going for a housing loan, mortgage loans, certainly don't say that I am already having term plans, I am already protected. Go for additional coverage to protect your new liability, that is the housing loan. Why? Because these schemes are usually group protection schemes and they have their own advantages. Because these group schemes have higher non-medical limits most of the time without even doing a medicals, you are being offered. But in term plans, medical is compulsory most of the time. And secondly, in these group schemes, the The claim process is very uh, simple because the bank does the job for you, and my nominees will not be involved because the ownership of these schemes are with the bank itself. And in the very rare eventuality of like where both the parents die in an accident, the nominee will not be legally be eligible for handling these monies. There also, these type of schemes will be very helpful, and therefore my asset stays protected and safeguarded. Therefore, don't compare your term plan with these schemes which are for your home loan protection. So while selecting a term plan, don't just look at the premiums, but also look at the history of the claims, how the claim settlement ratio of the insurance company is. And while filling the application, always go with proper disclosures of your age, your income, your occupation, your habits like alcoholism or smoking, or if you have any history of disease, don't avoid any of these. The premiums for a term plan is not that cheap, is not that costly. For example, a person with 50,000 rupee income, what is this HLV? 200 times, that is 1 crore. For covering a 1 CR for a 35-year-old, the premiums will be around 1,500 rupees per month. That is less than 20K in a year, which is equivalent to insuring a 15 lakh car. See, in my lifetime, when I start my job, say 26, 27, and I work up to 60, these 32 years, I will be buying at least 6 or 7 cars because I use a car for 5-6 years and then I change my car. So I am worth 6-7 cars, and here the premium of this is just worth just 1 car. Therefore, never bargain, and immediately we have to adequately insure ourselves for our human life value. Therefore, if you look at the benefits of a term plan, ideally there is no maturity benefit, but there is a lot of other benefits which I get. Why I said this is because many people say that this is just a death cover. I don't want a dying benefit or a death benefit. No, first of all, you are not the owner of this asset to say that. Number two, suppose if I am adequately insured, say for 2 CR, whenever I think about my liabilities, whenever I think about my family, I always remember that I am adequately covered. Therefore, this gives me happiness and peace of mind, and therefore I live long. Therefore, insurance is not for dying, but for you to live long. So insure adequately before it is late. So don't forget to subscribe, please like and share.